Once again, I want to say, if you haven't seen Sunday's video, watch it. It is worthwhile. I forecasted pretty much this whole thing. I said Monday, Tuesday, big red days, Wednesday, maybe, and yesterday, I wanted to say we were done with the big red scary long days, but in the end, I said, hey, you know what? On Sunday, I said maybe Wednesday as well. And sure enough, here we are. Look at this chart. It is so bearish. It's like just... When's it gonna end? When is it gonna end? Look at the volume. It's just increasing. Implied volatility moving up today. Not as high as it was on Monday, but it is coming up still. And the RSI is really low. It's so low. This is what I'm expecting, is to see the RSI turn around and set a higher low than back here, and for the price to set a lower low. And what that does is it creates bullish divergence, and that is where the average gains and losses are setting higher lows while the price is actually setting lower lows, and that typically tends to signal a reversal. It doesn't necessarily mean that the price will go into a bullish run and set new all-time highs, but it does mean that the price is probably at least going to bounce. So what do we need to get that? We need a green day, probably 2 green days, and well, at least on Sunday, I seem to think that Thursday and Friday would be great days to see that reversal. And now that I look at the charts and I get a look at what sentiment is like around the internet, it looks pretty bad. So what am I thinking? I'm thinking that now we might see a reversal. However, I cannot actually forecast that because it's just not in the charts. There's nothing in the charts that's not just bearish right now. So that's nuts. And I will get into my day trading and my 1 minute chart, and I will go over the IWM and SPY just really quickly. But before I do that, I want to pull up a different chart. I've been pulling it up a little bit. I have several videos about this, and I'm going to go over it this week, and I'm going to talk really, really fast because I don't want this to be like forever, but I do want to get like a lot of thoughts down. So here we go. This chart is a measured move down. That's what it shows. There's a phase 1, a phase 2, and a phase 3. This thing has been fractaling through the downtrend over and over and over again. I've gone over that several times, and here we have new major lows being set, which for me means that at any time this pattern can be done and we can expect some sort of reversal. That doesn't mean we're done yet. The actual price target for this pattern is $2, and Obi-Wan has been reminding me of that in the Discord. It's just not something I want to forecast. It's like $2 is like, that's extreme, you know. If we are going to get there, you know, this pattern is like 6 months long, so I'm not putting $2 on the board, but it's important to keep an open mind and remember that there is a technical analysis out there that puts this thing down at $2. This chart might actually look better on a monthly time frame, so I'm gonna go ahead and just see what that looks like. Hit OK, and let's see, can we see it here? It doesn't look good on a monthly time frame. Maybe if I had a blank chart, it'd be a little more clear. Yes, my blank chart's almost blank. I'm just going to clean it up really quickly. Bear with me. Clear drawing set. Yeah, get rid of that. Ish. Right, so let's see here. We'll take that high, right? This would be the first leg down, the corrective phase up, and then the first leg should theoretically match the second leg. I don't think it will, though, because if you do just draw this down, you take that leg down and you apply it, it's like, is it even above 0? It's like 50 cents. So that's a theoretical price target. I don't think that it's gonna go that low. I don't. If you take 43% of that run and you apply it, then you get a $2 price target, which is more realistic. But still, that's a huge pattern, and I'm not putting that on the board. I'm not doing it. It is possible that there could be more downside, and that's pretty much all anyone can say at this point when your daily chart looks this bad. This is crazy. This is exactly what I thought would happen, and sure enough, I'm doing great, doing amazing. So let me open up the 1 minute chart. I am just going to be, well, first and foremost, I guess I should say that I know that there are a lot of people watching this that might be long in AMC and that are feeling the burn because, you know, they're just long and they have no hedge, but that's not what this channel is about. It's not about being long. It's not about pump and dump. This channel is about me and my journal and learning how to trade. I don't need the market to go up. I don't need the market to go down. The market can go sideways. It doesn't matter. There's always ways and strategies to make money in the market if you know how to do that. And that is what I've been doing and been proving for the last 5 weeks. So without further ado, that's the 1 minute chart. But what were my day trades? Here we go. Day trading. Pulled up. Okay, lots of lines. That's incomprehensible. Yep. Gonna zoom in to the open. And yesterday I said if at the open we have a dump down, we would be confirming a descending scallop pattern, which I like to call the AMC swoopy. The AMC swoopy always ends with like this, this little rise, this, and then it tops and just falls apart. So we did have that dump, and that did confirm the pattern, and the price target for that was 1050, 1064. So that's what I was looking for today. And with that in mind, I entered into some contracts. So let's talk about that. I bought 4 May 13th $11 strike puts for $40-something a pop. And I did that on this candle right here. So the price opened, started coming down, couldn't find a rally, couldn't find support, volume was low. And so I entered into the contract and the price tanked. It just tanked. And it fell really low. And look at this, right on that candle, right where it bottomed temporarily. I bailed out of those puts. So I held them for a whole 2 minutes, maybe 120 seconds. And I made really good money on them. I sold them for $61 a pop, and I bought them for, let's see here, 46. So that was a good trade. That was a really good trade. And it was short, but $60, that's not bad for 2 minutes. Seriously, right? Nonetheless, the price rose, and I actually here entered into another put. I said, hey, why not? I just made $60. I'll enter back into that call or that put and wait for the price to come down. And I was actually spooked out. I was spooked out because, well, the price started to come above this level of support and resistance at 1150. And I just was not in the mood to lose all the money I just made. So I took a loss. $20 loss. And then the price rejected. And then I said, you know what? I'm going to hop back into that put again. And that's not great trading. Obviously, I should have just held, right? But at the same time, I have to consider all the options and the risks. And so that's how I ended up playing it. And I wasn't going to let the idea of being stupid like disrupt me from making the right call. And so I held this, a double top formed, and boom, the price started to come down. First, we had an initial downtrend with a very weak corrective phase, very weak. And when the price dropped from there at, around 1070-ish, I said, hey, you know what? I'm going to go ahead and sell those puts again. So I had bought 4 of them again at $52 a pop, and then I sold them again for $64. So that wasn't bad either. What was that, like $48, something like that? Anyway, then the price continued to fall, and I saw bullish divergence in the RSI and the price. That's where you have these higher lows in the RSI coming out of the oversold area, which is to say below 30. So, and then the price going dun, dun. This is typically pretty much a reversal pattern. You can see the price did move up, but as soon as that downtrend was re-encountered, and this downtrend starts from the top of the double top that we saw earlier, and is set by the corrective phase that we had previously, when the price came up to that level and started to fall down, I bailed out of that call because the divergence continued to develop, but the price continued to move downward. This is a crucial moment in momentum. If that bullish divergence fails to produce a run, oh my goodness, the price is going to keep dropping. And so I bought another put. Let's see here. I bought another $11 put. At this point, those puts were going for $81, and I was thinking to myself, if I only held them when I bought them for, what did I buy the first set for? Like $40. It's like, okay, all right, whatever. I'm still gonna do it. I don't care. There's still downside. I'm gonna profit from it. If I buy and sell the same contract, down and down and down we go. What I'm doing is I'm just securing profits. I am sacrificing maximum profits, but again, trading's all about mindset. You're never gonna make the most money that you could have, and it's important to realize that. Accept it and be happy with all gains. Accept all gains, all green gains. Blessed be green gains. It doesn't matter how big or how small. If you're making money, you're making money, and that is all that matters. Nonetheless, so the price starts to break down and fall until we came down to about $10. In Sunday's video, I said, hey, we're going to see sub $10 this week. And so when the price hit 10 and bounced, I said, you know what? I'm going to sell that put I bought. I sold it for 115, so I made more money there. And yeah, you can see my board here. There's quite a few trades. I ended up closing my other puts too back here that I held from yesterday, these $9 and $10 puts at a profit, which was good. I could have held them longer. I really should have, but again, you don't know where the bottom is going to be, and this was a bottoming signal that failed. So I'm just happy that I had enough cash to buy another put to capture that downside. At this point, I started to walk away and get ready to get this wonderful haircut. I have a great stylist. I kind of just messed up my hair, didn't I? But anyway, so I got my haircut, and when I came back, I saw that this nice clean double bottom had been put in, and ooh, look at that, $9.91, that's sub $10, Sunday forecast fulfilled, which is why I think we might see that Thursday and Friday rally. It just seems completely unlikely, and there's nothing on the charts that says it can happen, so sounds like a good time to rug pull bears. Yeah, it does. It sounds like a good time to rug pull bears, because I think that the bulls who thought that they wouldn't sell are selling, and I don't have anything to back that up. That's all. That's purely speculation. Like, this is a cap-ism. Trust your gut. I trust my gut. My gut tells me, yeah, sentiment's really bad. Everything looks hellacious. But there is always an end to the downturn. There always is. And AMC is famous for ripping higher really fast. I gotta tell you, I think everything below 16 might be a slingshot. I said in my last video that the vertical run down was broken, and that sucks because the bounce on the retrace is basically nullified. But Obi-Wan pointed out to me to look at the weekly time frame, and ooh, there's something there too. So here we have this double bottom ending today, right when my forecast on Sunday that a reversal should follow. Look at this, sub $10, double bottom, right at the end of a big downtrend. This looks clean to me, and we've got a nice volume spike on that second bottom. This looks good. This looks good. However, I can't forecast a reversal. That's purely speculation. So what time am I at? 11 minutes. God. Okay, here we go. I'm gonna go out to the weekly time frame really quickly and talk about what is out there. So the descending triangle target I had revised. Well, I had originally thought maybe $7, then I revised to 11. I said, you know, it's $11. It just depends where you're going to put the bottom of that triangle. This is the triangle. This is the June run that we had last year, and then this consolidation pattern. And okay, where you draw this line matters, because to get the target for this pattern, you take the height, you take a percentage of it, which in this case is 50%, and you apply that to the breakout price. And what's the breakout price? It's going to be defined by where you put this bottom trend line of the triangle, or this level of support and resistance, and it could be anywhere in that pink zone. So the target for this descending triangle is going to be variable depending on where you subtract the 50% of the height from. So it's kind of hit or miss. So I ended up saying, you know what, I think $9 is really good, and I used the I can't remember why I did that. It changed that to that level, but you know, that's really close. This is really close. Now, the thing about price targets is they don't always have to be met. The price targets are developed by Volkowski's statistical analysis, and what he does is he takes massive sample sets, like thousands of patterns identified by his computer algorithms, and he then measures the distance that each pattern moved relative to its size, and then it identifies the most likely outcome based on that research. And so it's not an exact science. It's, hey, it's statistically likely that the price is going to reach $9. So you've got a pattern here with a high of $72, right, and a low in $29.40. That's a huge pattern. So today we found a low of $9.91. And that's only 91 cents above the target. And how much is 91 cents compared to the height of that pattern? It's nothing. So this triangle could be done. Maybe we come down and actually touch that target. Sometimes that needs to happen. And you can see the RSI still has room to move before it becomes oversold. But this could be the bottom. Yeah, it could be. It really could be. But I'm going to need to see that reversal occur first. And here's the good news. This is why I came out to the weekly chart, and this is what I was trying to say that Obi-Wan was telling me. There it is. This is a vertical run down. We have 1, 2, 3 consecutive candles with very little overlap. I mean, yeah, the wicks and the tails overlap a lot, but it's a very volatile stock. We have the opens and closes though, making these nice clean moves. And then this week we had a similar open and a huge plunge. And this candle is much larger than the previous, which Bulkowski says could mark the end of this vertical rundown. Let's see here. Vertical rundown. Click here. We go down. And he has a trading tip here down here. I can't really remember where he says that the last bar is probably the last bar. It's on here. Anyway, this is the patternsite.com. This is where I get a lot of my information. It's just essentially a blog by Bulkowski. And he actually blogs on here too, which is cool. Let's go blog. So sometimes I go over here and I just like to see what he's thinking. Like he's looking Wednesday, 5/4/22, a look at indicators. Click it, right? And he's got, you know, this is a picture of the chart pattern indicator on the daily scale, the indicator in the line chart below, chart blah, 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 blah. He talks about CPI, he goes into it. He's blogging. This is really cool. So anyway, on this webpage, he says that long, tall candles like this can mark the end of a vertical run down. Implied volatility is coming up now. It has reached a high. This is exactly what I've been waiting for weeks. And at some point, I think on Friday, I'm gonna wait till Friday to show my trading log. It is looking absolutely sick. I am crushing it. Now, I haven't done any analysis today because, again, it's my journal. I'm just trying to get my thoughts and my observations down. I did want to take a moment and look at the 15-minute chart here. Good God. This is a huge downtrend. So let's just start our downtrend. That is started by the high at 34.33, and then we go down to the low, and we don't want to overlap the prices all of this line. So we pull it up. And, you know, maybe we have a little false breakout right here, and we get that touch of that wick there. This would be our downtrend. You can see that the price moves away from that line, comes back up to it, and now pulls away yet again. This is what I was looking for. I explained that in, I think it was Sunday's video. All right, so I just got my hair cut, so it's gonna be a little weird today. That's okay. It always is the day after, but it'll look really good coming up. This is a really far distance from this trend line, right? It's gone a long way. Now, there is a methodology to calculating a price target off of a trend line, and what you do is you take the price, the distance between the price and the trend line at the furthest point, and then you apply that same height to a breakout price, wherever the breakout may occur, and then your price target is up at that level, which for us, for now, for AMC, would be towards $20. That's really high. You can see that there's a consolidation pattern here right at that level. So this tells me that in the event of some sort of insane comeback, right? I don't know what it would look like, but you know, AMC tends to just do stupid, crazy stuff like take off like a rocket ship. If that were to occur, I would really be looking for $20. And it might take a while to get there. That's like the rational thing to say, but come on, this is AMC. AMC does not do rational things. I mean, it does. It does. In downturns, it does very rational things. When it's trending down, AMC behaves in a very rational way. When it's bullish, it just takes off like crazy. And it creates these massively volatile situations. You can see the implied volatility just goes crazy. The volume goes nuts. The RSI hangs out in the overbought area above 70 a lot. So I'm thinking that, you know, we could see something rather drastic. Like, this is pretty drastic to see this spill here. What was the price at here? $19.30 down to $12, back up to $19.30, and it did all of that from March to, well, all in 1 month. $7 price swing down, $7 price swing up in 1 month. And what we're looking at now is even more dramatic and more pronounced. So I think that a quick and swift reversal will occur at some point. I just can't say when. We have a low set here. When I draw that trend line, ooh, this is exciting. This is a reason to get excited right here. Okay, no. Zoom back in. Okay, here we go. This is the accelerated downtrend line. And I say accelerated because the downtrend's actually way up here. And the way I chart this is I typically take a longer dash for trend lines that are going over several days, or they have smaller trend lines below them. So that's how I draw that. And then this secondary trend line, this downtrend that extends away from the downtrend, I'd call this an accelerated downtrend. Anyway, you can see that when I draw the trend line, and then we're very careful not to overlap the price here or here. And when I do that, hey, look at that. Look at that. You can see when the price comes up, it forms these reversal patterns. Green candle, doji, boom. Down it goes, closes below, confirms more downtrend. Okay, and here, what are those? These are pipes. They look like pipes, like Mario Brother pipes. And then ka-gunk. Boom. That's a doji, reversal, and now we have a push above and a close above that downtrend. That is so good. I mean, really, I guess I should make sure the price doesn't go above the here, but this is a pipe top, and in my experience, these topping patterns tend to appear above the downtrends. And that goes vice versa for uptrends. Even if I do that, the price has still closed above that downtrend, which is really exciting. And you can see that there is some bullish divergence on the RSI. So short term, yeah, look at this. So you have this low, right, below oversold or near to it. And you have another low, I mean, after the price has risen out of the oversold area. You have another low that's higher. But what's the price do here? Now, it's important when you chart this divergence that you go by the closes. RSI is calculated on the close of the candles. So don't go down here to that bottom of the doji. You want to go to the close. And it's going to be on that, yeah, the doji right there. Okay, it's flat. That's okay. Even flat can create that divergence. And this is exciting. Look, we got a good volume spike there. Yeah, ooh, early signs. I'm going to say that what we're looking at are early signs of reversal. Tomorrow's open is going to be a signal. And it's going to be very important to be on board with the trend when it occurs. And if it is an uptrend, you know what AMC likes to do? Create price mirrors. So just imagine that there's a mirror right here and the price just follows this same pattern. I mean, that would mean a rise back up to about $12 and then some consolidation, right? And that would make sense. It really would. I don't know what that's going to look like, but this is honestly what I am watching for tomorrow. And if we do not see this, then the downside is tremendous because honestly, the price is all but ready to go into free fall. And that's true around the market. Okay, now I'm taking way too much time, but I said I'd do this. Here we go, IWM. Let me turn on the daily chart. I haven't looked at the daily at all yet. Okay. Okay, there it is, the low of 170.30 cents. We have come within 30 cents of a target, $170. There may be more downside. A full extension, a full second leg of the measure move down would be really down towards 150, and we don't have to reach that now. I think what may occur here is we may get some sort of consolidation pattern before the price decides to test that downtrend and move lower. Okay, and you have this nice stepped kind of a downtrend. This would make a lot of sense to me. Nice controlled way down. Unless there's like a black, what do they call them? Black swan? Unless something shocks the markets. Unless there's like a really bad crisis or disaster. Those kinds of things happen. If such event were to happen now, the markets are so vulnerable. So just don't count on that. Hopefully it doesn't happen. Hopefully we have a nice controlled descent, because a controlled descent is healthy. It's okay if things are down. And honestly, the stock market doesn't have to go up for people to make money. Like, that is a notion that I think is completely false. Moving into SPY, you can see that we've passed through some significant support and resistance. I'm going to turn on some chart drawings. I know I have some targets here. The ascending broadening wedge target at 404 was met and exceeded. We're not going below that. And we had a right angle descending broadening formation with a target of 393.07. And today we saw 391.96. So that target has been met. Yeah, price targets being met. This is a normal thing for me. You find a good chart pattern per Bulkowski's identification guidelines. You calculate the price target exactly the way that Bulkowski instructs. And I swear I have yet to put a target down that has been met. And there's always two targets, a bullish target and a bearish target. So that's why you see this up here as well. This is the bullish target. The breakout was down after a partial rise, which Bulkowski goes into on his webpage. Yeah. Oh, let me just go all the way up here. I want to go up there. Anyway, so yeah, this is a good spot to turn around, right? I think it is. I really think it is. And there might even be something else here for me to elaborate on. first and foremost, let me clear this chart too. I don't want these on here. Get out of there. Okay, so I'm gonna do something here. I'm gonna connect some lines. Now, whether or not I draw this line here or bring it down to that second peak, okay, that's kind of irrelevant. And you might have noticed actually on my right angle and descending broadening formation pattern, I did have 2 lines on the bottom. That's not atypical to have a plus or minus, a give, more like an area for a top or a bottom of a pattern. In this instance, I'm going to leave those 2 up there because I'm not really sure what the breakout price is going to be, but that appears to define the top pretty well. And then I'm just going to connect some more valleys here. And would you look at that? What does that look like? That looks like a descending broadening wedge. And I'm going to just open up Bulkowski's page here, and I'm just going to show how I do this chart pattern analysis. This is a descending broadening, yes, right, not right angled though. It's a descending broadening wedge. Broadening, well, I spelled that wrong. That's okay. Descending broadening wedges. Here we go. He says the performance of descending broadening wedges is near the bottom of the list, so they perform poorly, which is not great. So keep that in mind. So, you know, only 757 perfect trades for this one. Not a lot of data here, not as much as some of the other shapes. But essentially, he says there can be a price trend leading to it. Doesn't matter which way. It's got to be a megaphone tilted down. For proper identification, look for at least 5 touches. 1 touch here, 1 touch there, 2 touch there, 3 touch there, and we're looking for touch 5. Looking for touch 5, and we're not quite there yet. It looks like, you know, it's never perfect, right? It's never perfect. Maybe even this pattern starts way back here, and I should be cutting through the price a little bit. Maybe this is the descending broadening wedge. That looks even better to leave that tail out, and this was a gap down, and the price violently pulled back up. So this is a pretty good estimation of where the bottom of that chart pattern is, and if that is the case, then we can say that today is an encounter with the bottom level of this pattern, and we can start putting down price targets based on this. So he says the volume trend trends upward, which is not entirely true here. We do have an increase in volume now, although this is why averages are important. You can see this line that runs through my volume. This is a 30-period average. Kitty, you're gonna have to wait to get out. Got a cat in here, she wants out of the room. You can see that the volume actually is in a slight increasing trend, at least the averages. So that's why I have that there, is to help me see those sorts of things, because, you know, when it's so erratic like this, you can't really tell which way that it's trending, but connecting lows and the average is a great way to establish that. So this is looking good. What's the price target? He says for upward breakouts, use the highest peak, A. Well, that's really easy. So basically we're saying, hey, if this is the true pattern, then we're looking for a target up here. And that'd be nice. Of course, it put the market at risk of forming a double top, but depending on how the price reaches that level could matter a lot. Nonetheless, let's find out what the bottom target would be. So for downward breakouts, compute the difference between the highest peak and the lowest value B in the chart pattern and get the height. Multiply the height. Okay, so and then we're gonna do this from the lowest valley. So okay, how tall is our chart pattern, right? We have a high of 479 and a low of 391. That's huge. $79 plus, you know, $8. It's like, I don't know, 80. Well, it's like 40 bucks. Okay, then minus the lowest valley, which would be here. So yeah, there might be a target in the mid 300s. Mid 300s. It's possible that the markets could go down that low if we don't see a reversal tomorrow and Friday. Yeah, probably just going to spill down more, even harder, down into the high to mid $300 range. So I'm going to be following this pattern now too. Again, this is just really quick, brief observation. I'll go into more analysis on this on the weekend. I'm already at 28 minutes. Ugh. See, I try to keep these short because I want to watch them. They're for me. So, okay. I hope you enjoyed this, and happy trading.